sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up, guys? Hope everyone is doing well. In today's video, I'm going to be going over a lot of things, the general Bitcoin, Cardano, Ethereum, the stock market indices, and the altcoins I've been going over recently. But I'm just going to go ahead and jump into it because this is probably going to be a rather long video. So to go ahead and get it started, the first thing that I want to go over here for this monthly chart for Bitcoin is, again, I just want to reiterate these various colored candles you see being vector candles in terms of their directionally vector candles in terms of the entire definition of what a vector would be, scientifically speaking. So I mean, the image and then the patterning is pretty clear cut. Once you start to see these turquoise ones, it's essentially boron is on. But the idea is that, so let's just start right here from this second pi cycle high. You see these turquoises, we're leading up to our high right here, and then the reds and the greens basically are explicating intermediary periods, or perhaps build up, or or even build down. I mean, because technically the price was going down here, but in general what you'll see is you'll see turquoise borons, and then you'll see, once we enter a bear market, fixating on the 2014, 2015, 2016 time period for Bitcoin, we get our greens and our reds, then we turn into our pinks. You can see right here going back to 2011, the cycle period that I'm talking about right here. For this pi cycle low, we get pinks. We got a pink one for the March crash as well. Then we're also getting the exact same thing here. So essentially, October, November 2011, September 2014 to essentially really September 2015, and then from around November of 2018 to March of 2019, and then currently from May of 2022 to around January of this year. They're all synonymous in being the exact same archetypal structure in terms of Bitcoin's overall kind of just overarching cycle, phase cycle progression across time. Obviously they're going to be lengthening, and they're going to be the returns will diminish when it's going up and as the price is going down. Each of the borons, or my bad, each of the bear runs so far have gotten less severe, but they are to kind of to compensate for the less severe percentage drawdown, they're lasting longer, which almost, I mean, in all honesty, for the most part, makes it actually seem worse. I mean, the longer it lasts, the more kind of, I mean, drug in the mud investors are going to start feeling. But if we zoom in here, we'll see, if I actually just go ahead and take off Bitcoin, we can see, so of these moving averages, the neon green and then the turquoise and then the pink and the red are kind of paired. So we have kind of basically a blue shift pair and a red shift pair. Again, going back to a scientific way of thinking about it, blue shifting is basically gaining energy or having more of a positive nature to it, and then red shifting is going to be losing energy, having more of a negative nature to it. So you can see whenever we get a red shift, so it'll basically line up with right here, whenever the red, so the red and the pink moving averages overtake the green and the blue, it's signifying, as you can see right here, whenever we did get this crossover, it essentially lined up with the bear market bottom. To more clearly get a better picture, if we go to this bear market right here, you can see right here we got that shift into the red shift phase of price. And that is essentially, once you get into these further cycles, you'll start to see that it essentially lines up with halfway through the bear market. You'll see this shift of momentum halfway through the bear market, which is generally just insinuating, as you can see right here, you'll see the same thing happen in this area with the green and turquoise going below red and the pink. That just kind of marks the, obviously, as I said, the second half of each of the bear markets, and that general time period where we see perhaps the most voluptuous aspect of the overall bear market dump, especially right here for 2018, 2019, and also especially right here for our current bear market. You can see again We got their shift right here as well. Something that did happen this time around is that you'll see right here. So if you pay attention, so this purple moving average right here, which is actually part of the pi cycle. So the turquoise, so the turquoise, green, pink, and then red. So these right here are part of the trader's reality. Again, indicator up here. And then the purple one, these two purple ones right here are of the pi cycle indicator. Actually, this pink one might, okay, yeah, so this pink one's actually a part of the pi cycle indicator as well, but what we'll see right here is if we zoom in, right here, you can see this purple one right here, basically this almost kind of like six-pointed star cross-section right here of this turquoise one, this pink one, and this purple one. We get that crossover. If we go back to each previous bear market, you can see that this is the first time that we see this purple and the pink kind of coinciding like this. As you can see, the pink was nowhere near up here. If we actually take a look, the pink crossed below this turquoise moving average, a part of the band. It didn't happen back here during this low. If we go back to 2014, 2015, it didn't happen back here either. So this is just another kind of just a structural record that we've set, you know, obviously being further into the decay, the maturity of Bitcoin. This is why we're seeing something like this. And if we actually go back each time in the past, given that this essentially, it perfectly, as you can tell right here, coincided with the purple going below the turquoise moving average of the band. If we take a look at each other time that happened, which right here it happened, and then we had the March crash of the previous phase, but essentially it's, for the most part, this purple crossing below this one turquoise moving average is a bullish indicator for the most part. Maybe a little bit more downside to come, but for the most part the bull run has begun. Especially going back to 2015, as you can see, we get that cross right here, and that is quite literally when this bull run started to begin. We got these pinks, and then we had some reds and greens right here, and then we started to finally get our first turquoise, marking the beginning of the bull run. If you see, typically it's generally pinks leading, pinks will lead into greens and reds, and then once you see the turquoise, the bull run is essentially confirmed. You can see the same thing right here, and also we can see the same thing right here. If we actually if we tweak, I think it's, no, it's not. So if we tweak this just a little bit, like for example, the up level's on 71. If we go down to 70, we get this one as a turquoise. So I mean, if you could say, personally, my bias is that the bull run is, we're heading into the next bull run. I mean, obviously there's still possibility that we get something similar from 2019 to the March crash. We'll get like just a relief rally, and then we'll have another intermediary downside that won't, I mean, overall, still, whether or not we get a coming relief rally, not a full-on bull run, the bottom line is, and has already been set into concrete, is that we have hit a low that structurally and systematically coincides with the overall absolute and macro lows that Bitcoin price is set, and that is confirmed by the moving averages I just got done going over. We also have our pi cycle indicators as well, again going back to the vector candles as well. So there's 3 points of reasoning here essentially. So what I wanted to get across with right here with these basically the 6-pointed star almost that we see right here of this purple, pink, and turquoise moving average. This purple going below turquoise has been bullish in the past. If we actually take a look at it this time, right when the purple went below this turquoise moving average is literally when we got our first green candle and the first major reversal of this overall bear trend we've been in. And basically what I'm seeing here is that this pink going below the blue moving average as well, again for the first time, is just further emphasizing the bullishness that is likely to continue to print here, as we have been getting ever since we did get this nice reversal we have been seeing. If we take a look here at the RSI, we'll see, using this inside pitchfork indicator, or not indicator, but this drawing tool, whatever, taking it from kind of just like the median, kind of an average way to draw this, where it kind of nicely fits in all of them from the bottom of 2015 to the high of 2018, 2017 to the lows of 2019. You can see here we've set historical RSI lows on the monthly chart, and we have gotten the RSI to jump above the 618, which is this kind of teal green range that we see right here. So I mean, pretty clear picture painted here. Again, just factor this in with this up here. So again, that brings in 4 very significant points of reason to believe that the bull market, or again, like I said, at the very least, a relief rally, but personally, I feel like it's leaning more towards a full-on bull market reversal that we're seeing here. So, and then also, we are seeing this MACD right here get this, each one of these little black vertical lines is representing the exact same picture as like lining up with the RSI, these pink vector candles and everything. I mean, these are all pointing towards the same picture. The moving averages, the pi cycle, the RSI and the MACD, the directional vector candles, it's all pointing towards the same thing, and they're all just further exponentiating the validity behind why we're getting this momentum flip. I mean, like I said, we got MACD's been going upwards as price the entire time. These pink vector candles up here are being printed on this monthly chart are the MACD as being a momentum indicator has been moving upwards. We're finally now crossing this threshold of converging towards, I don't even know, this is actually not even on 0. It says it, okay, never mind, it says it is. All right, yeah, so again, we've converged towards the 0 point, broken above it again. See it back here as well, but outside of that, the other main thing that I wanted to go over, which is what I was talking about on my community post the other day in regards to this video. One of the reasons why it's taken so long to get this video out is because I've been dreading having to explain all this, because it just, I mean, I enjoy explaining all this stuff because, I mean, it's what I'm passionately interested in terms of an intellectual sense, but at the same time, it's aggravating because it's a lot for my head to have to juggle and get out in a coherent manner and articulate it the way I want to. But essentially, so again, just kind of keeping everything that I've already gone over in your remembrance in terms of the moving averages, the vector candles, the RSI, MACD, etc. So those are basically kind of like derivative outside-esque indicators of where Bitcoin's price is lying right now leading into a bull market. So now what I'm fixating on, which is what all these drawings, the main contextual point behind all these drawings you see on here is just price support. So basically what I'm getting at here is I up here in this left corner, what we're seeing is a confluence of ascending support, horizontal support, and descending support, which again is right here. So we see this very macro yellow support. We have our also still a macro horizontal support, and then about a 1.5 year macro descending resistance. I mean, so I guess technically you could look at it as it's a confluence coincidence of 2 support of horizontal and ascending nature, and then a descending resistance, which will flip into support, and what we have already technically flipped in support whenever we tested around 19.7 thousand recently, with that more major drop we saw in price again recently. So essentially what I'm getting at here is, I'm going to take it up to this portion. So you can think about each of these types of support, horizontal, ascending, and descending, as think about it in terms of XYZ, in terms of space, which is why I have this box drawn right here. Think about an actual cube. Obviously, a cube is going to have a spatiality of XYZ in terms of having a magnitude, and that's what is of this text box. Ascending, horizontal, descending, as I said, you can basically think about ascending as X, horizontal as Y, and then descending as Z. Confluence to support, and then by this omega symbol, and then like momentum switch, that's essentially meant to kind of being the unifying factor of the moving averages, but more specifically the MACD and also the RSI. But because, I mean, if you're seeing the reason why we're seeing this this triad confluence of support is because of how these indicators are looking, and then vice versa as well. They rely on each other in the sense of space and time rely on each other. Like if you have space, you have to have time, because that space needed to have a period of time to form over, and if you have time, that explicitly implies, or I guess more rather it explicates the fact that there has to be space, because if there's time, then that means there's something's having to form over that period of time, whether it's the space itself or the matter that begins to coalesce within that space. But outside of that, the other thing that I wanted to get across here is, again, I have each of these boxes on each of these other vertical lines. Again, this is kind of just each of these points. Again, I have 6 pointed stars drawn down here as well, similar to what I was pointing out with the moving averages earlier that I was speaking about, and seeing those 3 cross over at the same point, having that same center point. But so looking at right here, the one other thing that I want to point out what these vector candles are is, again, we seem to just get right here, we see 2 greens, turquoise, 2 greens, then we start to get turquoise, and then 2 greens, turquoise, again, essentially signifying that the bull run has begun, the bear run's over. So each of these little black stars you see right here, again, lining up with these vertical dotted lines, you can basically think about these as black holes, or even just stars. I mean, black holes are essentially stars, or just black holes are kind of stars at their highest evolution, essentially, to kind of simply put it. But what I mean by this is that each of these black holes, it's like each of these bottoms is pre-programmed into the price of Bitcoin. Because I mean, if you think about it logically, I could, if only I had the right mathematics, I could, whatever mathematical logarithmic function is associated with the price of Bitcoin, if I were to program it into like the Pine editor that TradingView has, then I could have a certain logarithmic curve that goes through this that would land on each and every single one of these final supports or bounces that indicates the reversal back into another bull market. And that is essentially what I mean by the pre-programming of each of these lows, because like I just got done saying, that there's a specific mathematical curve, a mathematical function associated with the price of Bitcoin, and if only I knew it or anybody else knew it and it was on here, it would coincide with each of these black holes. And again, what I mean by that is that the universe is essentially a massive fourth dimensional hyper complex manifold. It's essentially like a ball of yarn. It's mathematically known as a Hopf vibration, but a ball of yarn, if you imagine a ball of yarn, it's similar to this I mean, it looks like this. This is basically what I'm talking about right here, this little ball of yarn looking structure called a Hopf vibration. Along this little structure, imagine there's dots on each one of these. This is all, like, you could unfold this ball of yarn into a single straight line, but then you fold it up into this ball of yarn, and on that ball of yarn lies each one of these black holes, or these Bitcoin lows. And that is just, if you think about it in a scientific physical sense, it's pre-programmed into the structure that Bitcoin is already planned to go to each one of these lows. So hopefully that makes sense, and the whole point of that is understood. And what this drawing right here is basically, you could imagine that, so this center point, this black dot and this purple dot, represents the point in time, or the present. You could basically put this black dot and this purple dot on each one of these stars, and then these little spirals go out from it. So like, imagine we start out small down here, and as volume increases towards these highs, and then we're also starting out big as the bear market's beginning, then volume tightens up again, or whatever, volume, acceleration, velocity, whatever you want to call it. Honestly, it really doesn't matter. But basically, we just see kind of these, the same iteration of these cycles continue to fold out over time. And if I were to kind of continue this out, we'd see big, and then it would tighten down again, and then it would expand again, which would be expansions line up with bull runs and bear markets, and then the points of convergence would be, where we're converging in at price, again, further lining up with what I got done mentioning with the MACD being that overall momentum indicator, and kind of specifically pointing out the more precise points in time when the price is actually going to shift its momentum. Outside of that, like I've been mentioning for quite some time, we're getting something very akin to a 5-0, a bullish 5-0 pattern. It doesn't fall in the specific rules of what a bullish 5-0 pattern is, but given that I am an autodidactic polymath, I've created my own understanding, and I've kind of like formulated my own little like school of thought essentially in my intellectual studies, and I just refer to basically everything that I've been going over with you as a sign theory. And right here I have like kind of like the logo I would use for it, like if I were to write like a book or create an article about my way that I view the market or whatever. Anyways, it doesn't matter. But this is just it's an M and a W. I mean, technically it's an M, and then I flip that M upside down, and that just goes into how, I mean, if you're familiar with my content, I mean, and if you already have been studying market analysis anyways, the M's and W's are essentially the most basic, most fundamental patterns that price moves. If you just start to eventually, hopefully, you know, it'll start to intuitively click as you analyze the markets, that if you look at the way that the price flows over time as just making M's and W's, you'll start to see those massive, those most major pivot points. The other thing that I wanted to go over in this video is this massive little image you see right here. So again, we see these yellow spirals. That's going back to this spiral that I went down over here. So if anybody remembers the adoption rate curve, some people speculated for Bitcoin it'll kind of function more like an S-curve, and that actually, S-curves are actually inherent to the way galaxies form. Right here would be a picture of a galaxy. These purple bubbles you see are Fermi bubbles. They are bubbles of radiation created by the galactic jets the galaxies spew out during their more active period of their overall period across time. And they do that whenever they're young, and they're having to coalesce all the stardust and the physical matter, the essence, in order to start to coalesce it in the right way to form a planet or a moon or a star or whatever. And it follows along with this S-curve. Again, these yellow would be the one more specifically to this one, but this blue one is what lines up with this right here. Again, how this, what you could imagine inside of this, these Fermi bubbles are tornado-like vortexes that find that convergence point right here. Again, that's the exact same thing that I got done painting in terms of a analogous picture of what these stars right here represent. I mean, you can think about each of these stars as galaxies within the overall like universal intergalactic network, which again, like I said, is just dots lying along that ball of yarn structure that I showed you, which is mathematically known as a hot vibration. In each of these little spiral arms right here, you see that kind of that form the galactic plane where our solar system moves around in. You can almost imagine it as like, the tornado spirals, the whirlpool of the galaxy starts out within these Fermi bubbles, and then over time it starts to kind of, once it starts out and it goes out, I'll go ahead and get a drawing tool to do this. It starts out and it starts curving up right here, but then eventually all this essence that this black hole is spewing out is going to have to, through the natural gravitational flow, it's going to have to start collapsing down towards this actual plane, and then that's where it's spiraling. It's basically like mirroring the spiral, the initial spiral that comes out of the galactic jets in association with the bubbles. But outside of that, I have some other pictures right here that kind of show. Right here again, you'll see another galaxy. This right here would be the galactic plane. This little line you can see right here would be the galactic jet, and then these areas right here would be the Fermi bubbles. Right here is more of an artistic drawing of it. You see this galactic jet being spewed out, which would be synonymous with this line that I have drawn right here, which, to tie this into Bitcoin, if for whatever reason, let's say that given the recent the bank runs in terms of Silicon Valley Bank and Silvergate, and like the Israel withdrawing like $1 billion or $1 million, I forget how much it was, but it was one of those two values from Silicon Valley Bank shortly before it collapsed. And a bank run is when people, through like a rumor type median, people start to think that this bank's going to go insolvent, and then going insolvent means the bank no longer has money to give to its people whenever they want to withdraw the money. Because if you're not already familiar with it, banks don't, like, whenever you deposit your money to the bank, they do whatever they want with it, and you just basically are banking or betting on the fact that your bank is going to have the money for you when you want to choose to deposit it, because they're doing whatever they want with your money when you, or not when you deposit it, but when you withdraw it, and then when you deposit it, they do whatever they pretty much want with it. But so let's say, given again these recent bank runs and the collapsing of the banking industry, likely lining up with the decoupling that I've been speaking about on this channel, the fact that the stock market indices aren't doing good as well, but Bitcoin has. We're likely seeing this decoupling, and if so, that would mark a point in Bitcoin's adoption rate where it's probably going to start to increase to a degree that it hasn't before. And if so, there's a possibility that right now we are, I'll go ahead, so go ahead and circle it. Right now we're right here in this little area, right here. So let's say, given these bank failings, it's going to continue to go on out. The CBDCs get pushed on people, and this is marking the point in time where the decoupling starts and blockchain sees a massive rate of adoption that it hasn't seen before. And this is going to cause basically the structure of Bitcoin's progression in terms of price over time to basically go to the opposite of what it has been so far. From starting from down here up into this point right here, it's been a logarithmically decaying process, and then so flipping from that logarithmic decay into basically a parabolic exponentiation, which so the two models of this we could see is like, this is what we've been doing, now we're about to flip into doing the mirror opposite of this, and now we're going to do something like that, and we're going to have a period where we're going to kind of see this build up, and then we're going to have a period where we just see massive parabolic exponentiation and the percent change of price in a positive manner. This is quite literally like this segment right here is quite literally just how we've seen Bitcoin form so far in its logarithmic manner, but I just flipped it upside down basically. But that was about all that I really wanted to get across in this part. Hopefully I did a good job of explaining that, and everybody that was listening and is still listening hopefully understood it. Hopefully I didn't do a terrible job of getting that across. But got this other chart that I want to go over, this 2-weekly chart. Again, this is just further strengthening the chart that I already got, the monthly chart that I just got done going over. Again, I'm going to reiterate this halving, this temporal halving indication we're seeing here. If we go to each of these halvings, at the center of these two dotted, each of these these periods of these dotted lines you see, at the center is when the halving actually occurred. If you go out around just within a range of 70 to 80 bars, it lines up with the bottom. You can see if we go to our current time, we are quite literally, I mean, if we just go back to the previous cycles, we are, according to the previous phase, similar to May of 2019 when we were heading towards the top of this intermediate high. But if we look at the cycle or the phase beforehand, before to that one in October 2015, we are right at the brink of a massive bull run. So that's again why I was saying, like, either we are, in terms of the possibility, either we're going to see a relief rally and then we're going to head into some more intermediary lows similar to the March crash and the previous phase back here in this area, or we're going to see an overall total bull reversal, which again, the latter is what I believe. I believe we're going to get an actual bull reversal. Also, if you, on here I have some different moving averages, but basically we see, I think I went over this actually in a previous video, but each of these green boxes in the circled arrow and line up with all of these 5 estimated moving averages, they all start to entangle. We get this crossover right here, initiates the final dump, and then if we actually, so if we start from the entangling of this red one and this blue one, then we go at 22 bars, lined up with the beginning of the bull run, and that's exactly what we are looking like right now in our current bear market, leading into what this will hopefully be, a bull market reversal. And then what I find interesting about this is that, so our current bear market and then going back to the bear market of 2014 and 2015 are essentially identical. And then the previous, so this current cycle that we're in, of this more earlier part of the phase 1 that we're in, is about it's essentially, in terms of the lower, as you can see, 22 bars, 11 bars, 22 bars, essentially about half. And then the upper range up here is just a little bit less than the 11 bars, staying constant between this 2014, 2015 and our current bear market. But as I've mentioned in the past, in terms of price harmonics and the structural integrity of the movement of price, our current bear market right here, as you can see with this kind of ABCD, this lightning bolt pattern right here, and then we have this kind of ranging bottom, and then we finally get this reversal. It's exactly what we did back here. We have this ABCD right here with this M, and then we get the reversal again, just to go back up here, ABCD lightning bolt. Then we see an M right here at this bottom, and then we reverse upwards. And then so this part right here just coincides with this this area right here. I mean, if you were to count it in terms of like an Elliott wave type of way, it would be the exact same as well. And like the intermediary linking point of this overall lightning bolt or ABCD pattern right here is a bearish Gartley, and that's essentially what we saw right here as well when we got rejected from 48,000. And then the last thing is right here, which again I think I already went over it, but just to reiterate, you can see right here we get these two white moving averages, so the 50 moving average, the 50 period moving average, and the 50 period estimating moving average. We see those two entangle. Started the first reversal of that bull market. And then we are actually seeing again the same thing right here as well. So again, just further, and that only happened within our current bear market and going back to 2014, 2015. So again, that's just further signifying the vast similarities between these two periods of time for Bitcoin's price. Looking at this text box right here, the next halving will likely occur just sometime within the first half of 2024. Likely probably being more somewhere around March to May if I had to guess. Right here, each of these, so the white and the black one are essentially the same thing. So basically there's only three outcomes, I believe. We have the white and the black as being one outcome, and then we have pink and green being the other ones. The white and black one again is what I believe is most likely to happen. The pink one is just how we performed after 2019 to 64,000, and then the green one is how we performed after 2014, 2015, leading to the high of 2017. And again, as I said right here, so all potential, these are all the potential boring scenarios according to all-time history. For the white to black one, we're looking at more of a high range from 200 to 300,000. If we take the pink or green one, then we're looking at a high range from around 300 to 300,000 according to the pink one. And if we take the green one, that, I mean, it could push as high as about 1 million to 1.3, 1.4 million or so. And if these pink one or the green one happens, we're likely to top out more towards 2025, 2026. White and black one is more towards end of this year, beginning second half, or end of this year, first half of next year, bleeding into a little bit of the second half of next year, 2024. Again, right here we can see essentially the same picture pointed out on this RSI as well as I went over on the previous monthly chart. Again, we're just seeing, we see a bullish divergence every single time. I mean, each of these green boxes are denoting the exact same type of formation and price. We hit the same rough range around the 0.618 to around the 0.144. Those might be the 1.618 and the 1.144. I don't really remember, but essentially it doesn't matter. It's the same thing. It's just different iterations over time. But outside of that, here for this weekly chart, just to get a further perspective, again, we see our descending support or resistance of the XYZ that I was mentioning on that monthly chart. You see we got our test right here when we hit around 19.7 and 19.4 thousand. We've seen a massive increase in price right here. Again, like I said, if we continue to go down for whatever reason, like let's say we're getting a relief rally and then we get like a similar March crash. If that happens and we head into a relief rally to a March crash, then I would believe that that March crash wouldn't go any lower than our previous lows. Likely it would only come down to maybe around like 18,000 or so, similar to how this March crash didn't actually really come down to these lows. So I mean, realistically, personally, in my opinion, I don't think there's any good reason to say that Bitcoin is going to go lower than its already lowest low, around 15.5 thousand. But if so, 12 to 10,000 would be the next range. Don't think it's very likely at all at this point. I think it's pretty much been confirmed that it's not going to happen at this point. Right now, I believe we're just going to generally see just a build up towards no higher than approximately 40 to 43,000. Once we hit that, we'll move towards the previous all-time high range around 64 to 70,000. Once we sit there for a little bit, likely find consolidation, then we'll move to around 113, 150,000, and then after that, move towards the $200 to $300,000 range. So in general, it's a 5-sequence move in price or a 3-sequence move in price, which has been historically identified as the way that the market typically wants to work. For this chart on the 2-day, again, I just have this curve linear falling wedge is essentially what it is. Also showing and lining up right as when we broke out of this bear market. I personally believe we entered into this flag pattern, which is formed as a bullish megaphone at this point. As I mentioned in one of my community posts, worst best case scenario, we come down and we test around 22.5 to 23,000, then move up from there. Or we come down and we test more so just around 24 to 25,000, which would nicely just line up with where we've gotten rejected, going all the way back to July, August of 2022, and also towards these two highs, relative highs right here, January to February of our current year. This red pattern is just simply, for whatever reason, drop back down to 10, or make new low lows. Let's say the bear market's not over 12 to 10,000. That would be like a market COVID crash type scenario. If we, for whatever reason, don't get stopped right here at around 18,000, like I said, which again would line up with this descending resistance, which is flipped in support of this red dotted line right here. Again, likely with the way this black line and this fractal pattern is, we'll continue just to kind of test this ascending resistance that we're seeing right here, leading up towards, like I said, 40 to 43,000. What I find interesting is that essentially, so this bullish flag, in terms of this megaphone, the way the pattern that it's chosen, it used this overall massive macro resistance as its support, which I find just very elegant, and it's just really nice to see in general. But outside of that, going to this daily chart, this is just essentially the same picture I just got done painting, but on the daily, further showing this bullish megaphone. Maybe we'll come down 23, 25, 24,000. Right now we're getting entangled along our 800 EMA, which is lining up with this ascending resistance so far. Again, we're all just finding these nice confluences. Hopefully, best case scenario, we'll just see price not go back below 27 or 26.5 thousand. We're basically to see a sideways short period consolidation right here, and then we'll head towards like 30 to 32, 33,000 as I've been mentioning recently. And then again onto 40, 43,000 to see that gradual build up in the price until it finally gets that massive break. Here on this 4-hour chart, again, just have all these labeled out. We have our 16-month bear market resistance, came down and retested that. We have a 7-month bottom range resistance right here, and then a 9-month bottom range support. That's just if we come down to 12, 13, maybe even as low as 10,000. Just the various scenarios we could see if we continue to go down for whatever reason. The 30 to 32,000, 33,000 range, 34,000 is lining up with the 1.618 of the Fibonacci retracement taken with respect to our overall macro bottom to the high that solidified this being a bullish megaphone pattern at 25,000, which again has just been a very important price as I got done mentioning. So that's again this excuse me, another reason to see all of this is perhaps the more than likely scenario to end up playing out here for Bitcoin. This is just right here on the hour of the same chart that I just got done going over, further zoomed in. Again, nothing really much to go over here, just to kind of continue to show us this entangling. Right now we've literally just been serpentine trading around our uppermost resistance, which would be this black line, black dotted line right here. So either Bitcoin's going to make up its mind to continue to go higher, or we'll get those tests down to the range of 25 to 23,000, or like I said, worst case scenario, the bear market's not over. We're essentially seeing the exact same picture here with Ethereum. It's testing its uppermost resistance. Really nothing special to go over here for Ethereum. And all these altcoins I'm going to go over, as I say all the time. I mean, it really all it is, obviously, as most of you I'm sure are aware of. It just depends upon what Bitcoin is going to do. If Bitcoin crashes, Ethereum, Cardano, and all these altcoins are going to very likely go with it. So, I mean, if we start to see Bitcoin lose 23,000, likely that means Ethereum is going to be losing its important support of just generally around 15 to around $1,400 for Cardano. That lines up with losing. It's a little bit different for Cardano because Cardano doesn't really look a lot like Ethereum, right? I mean, it still looks the same. It just does it. The way that I like to think about it is like, I mean, all these coins are following along in Bitcoin's path, but each of these coins kind of implement their own unique way of trading, and they look slightly different, but at the end of the day, it's still kind of, its pivot points in time are essentially the same. Right now, important for Ethereum or Cardano to not go back below is going to be bare minimum, so 29 to 30 cents. We want to see this start to push back towards 40 cents and above. Obviously, I mean, that's rather self-explanatory, I'd have to say. So here for the stock market indices, as I've been mentioning, I personally just think the decoupling is going to happen here. I do have on this New York Stock Exchange, we are, as you can see here, we've printed red vector candles. We broke below the turquoise moving average EC right here, and right now we are below the 800 EMA. I have been mentioning that if that happens, it's going to just continue to further strengthen likelihood that we're going to get a massive collapse here again. Likely heading into stock market conditions worse than the previous 2008 crash. At the very least, essentially almost identical to it. A lot of news media outlets have been putting out plenty of articles saying that we're heading into a time like 2008, if not even worse. Some of them are also saying, oh, it's not going to be anything like that, but at the end of the day, all this stuff, these bank runs, they have been intentionally done in order for the governmental, institutional enterprises to intentionally initiate a collapse of the old monetary financial economic system so they can bring in this decoupling, which is going to bring in the new era of blockchain-based applications and solutions in regards to not only the economic and financial sectors, but literally just about every single aspect of day-to-day social life in terms of peer-to-peer cohesion and interaction. But the New York Stock Exchange also kind of looks like it could be forming a type of bullish megaphone, as you can see with these black support lines, this purple line right here. I mean, we could see a short-term reversal of the stock market towards the upside here, but then it could hit this red range and then, you know, still enter a complete bear collapse. Still lining up with this turquoise pattern, just going straight down right here. I mean, it's all essentially the same thing at the end of the day. There's an infinite number of paths that the price could take, but only one of them is going to happen. I mean, we're essentially seeing the same thing here for the SPX. SPX looks worse. Same thing for the NASDAQ as well. The SPX and the NASDAQ look most alike, and the New York Stock Exchange, all three of them look alike, but the New York Stock Exchange looks the most different. The SPX is hanging on to its last life support, as far as I'm concerned. So if we start to see the New York Stock Exchange lose around 14.4 thousand, likely gonna start, you know, continue to initiate this downside. The SPX losing 3,800 to 3,700 won't be good. If it starts to break significantly above 4,000, we might see that kind of just intermediary push towards the upside. But overall, I mean, I don't want to come off like insanely dogmatic and say, but I just don't see any good reason to say that the stock market's not going to start decoupling from Bitcoin, or Bitcoin's going to start I feel like it's pretty clear, not just in the charts, but also in the way that the world is being ran and taken about by the leaders and everything right now. The NASDAQ is actually looking the best out of all of them. It's breaking above. It's been going up, whereas SPX, you can see, for the most part, has been going down. It did have this minor increase recently, but it's still an overall downtrend. NASDAQ or the New York Stock Exchange just looks rather bad for the most part, but NASDAQ starts going below around 1,200. That's going to be the next place to look out for. Pretty much 11.9 to 12,000. Starts losing that, and again, further downside, decoupling, etc. But so now to jump into the altcoins and whatnot. Here for XYO. XYO hasn't been looking too hot recently. I still personally believe that it's just moving with Bitcoin in its own unique type of way. Still following along with Bitcoin, but again, like I said, moving in its unique type of way. I don't think we'll get this massive collapse like I've been mentioning recently, with this falling through this black fractal pattern. I personally see the full-on completion of the bear market for XYO in terms of looking at its price harmonics. That's being denoted by each of these three colored boxes, pink, black, and then turquoise. I think according to the way Bitcoin looks and its structure, we've seen an overall bear market come to, and I believe where we are right now is synonymous with this area right here. These two areas right here for XY are essentially the same as far as I'm concerned. So I do believe, even though this XY to Bitcoin is technically closed, it's got a day and 21 hours left until this candle closes, but right now we are trading more solidly with the body of this candle in lows that it didn't do the last time in its lowest low. So I mean, that does not look good. But I mean, if you take a look here at the XYO to USD chart, it looks a lot better. We've had the spike, we broke above this macro, which would line up with Bitcoin's 16-month resistance, that descending resistance, which is now flipped into support that I was talking about earlier. We've just been trading within this very, very rough, and in all honesty, it's not a falling wedge, but that's just how I have it drawn out on here in terms of this yellow support resistance range that I've created in a triangular-esque fashion. As long as we don't start to lose really about 0.0043 for XYO, 0.004 to 0.0043, then I think everything is still looking good. We could see a temporary dip down into this box and then find support as like a fake out of this triangle pattern. But just given the way that I see the market and how I see that, I don't think that this coin will set new lows, especially if Bitcoin continues to go higher from here. There is still that possibility that, given this coin has been decoupled more from Bitcoin than a lot of the other altcoins have been, and by that I mean the XYO kind of seems to move more in its own groove than a lot of other altcoins do. So I mean, there is that likelihood that XYO gets this, you know, this massive crash right here, and then as Bitcoin's going up, and then Bitcoin starts to go up later. I mean, again, at the end of the day, there's an infinite amount of paths I could put on here, and only one of them is going to be taken. So I mean, who knows what's going to happen? But right now, it's important to see XYO break back above 0.0058, so essentially 0.006, and then push towards 0.0067 to 0.007 and push back above that. That starts to happen, that would likely initiate, perhaps maybe you would want to take a breakout trading perspective and look at it as the breakout of an overall pattern. And then, I guess, like I've been saying for XYO, it's likely going to reach about a penny and a half to 2.5 pennies for its next move up, or it could completely blow straight through that. I'm going to go rather quickly through all the rest of these altcoins, because I mean, really, at the end of the day, like I said, it all just kind of depends upon what Bitcoin's doing. If Bitcoin continues to go up from here on, just go ahead and assume that all these altcoins are likely going to be moving up with it. Phantom found support right here at its lowermost range that I was pointing out previously. We've come up and we've gotten rejected about this 200 or this 800 EMA once more. Right now, we just need to see Phantom move back above this 800 EMA at approximately 52 cents, continue to push higher. Here, if we take a look at JASMY, it came down to this range that I've been mentioning recently. It's been sitting within it, so don't need to see JASMY. If it starts to break below, realistically, 0.004, not going to be looking good. Starts to push back above 0.005 to 0.0055. It's going to be looking good for JASMY. Then obviously it needs to break above the 0.0077 to around 0.0082 of these two highs that it's set back here to continue moving towards the upside. Essentially the same picture here. We hit this blue box like I had been pointing out previous videos. So if we come back down, maybe we could test that, you know, do something like this, or maybe if we end up breaking through 86 cents, just about approximately, it's not going to be looking good. I would say the most major price target that needs to break through towards the upside is around $1.15. Once it starts to really push through $1.20, unless it's going to form a double top, then it's likely going to continue higher than $1.30 if I had to guess. If we take a look here at TRIAS, again, it's the same picture essentially here. We're coming back down and we are finding support roughly right now along this median ascending line right here. You can see that's where we found support right here, $2, and then maybe we'll find again, we'll form like a double bottom right here, and we'll continue to move towards the upside. We did again, I circled this in my previous update video, finding support along with that, so that's nice to see as well. If you take a look here at Doge, again, we're seeing we found support in the exact same ascending range with each of these three bubbles, these two white trend lines right here, associated with these pink ones right here as well. We just need to see it hold essentially 7.5 cents and continue to push towards above 8, 9, 10 cents. And then again, like I just got done saying, we'd likely see a break above the 10 cents, maybe come back down, retest that, then find support, and then move towards 13, 14, 15, so on and higher for Dogecoin. For CRU, so far we have completely come down and we met the price target range. As you can see right here of this falling wedge pattern, you could see right here. So that is nice to see as well. Again, like I said, all these altcoins are essentially doing the exact same thing, which I'll ultimately, as I've been going on, is just going back to how Bitcoin's been forming like this, but TRIAS formed like this. And like I said, they're all following Bitcoin, but they're doing it in their own unique type of way. For CRU, the fact that this has met this, it also met its same 16-month or just macro what was resistance now being flipped in support. So again, this would be an altcoin basis to further confirm everything that I've been going over essentially. So I would say once we start to see CRU pushing towards, obviously $1.90 to $2, it's likely going to signify pushing back above the $2.40 that it's gone to at highest so far. Or like I said, maybe a double top ends up forming on all these coins. But right here for Algorand, we're still trading below the lowermost ascending support range. So it's not looking too great, but right now we just don't want to see Algorand drop back below 19 cents. If it does do that, maybe we'll see, this push back down to this second yellow box right here, and we'll see something along these lines. Maybe we'll come down and just hit it once. Maybe we'll make a double bottom or triple bottom or whatever, just some sort of bullish reversal pattern, and then we'll continue to move up. But I mean, if Algorand starts to lose 18 cents, that's not going to be good. Likely Bitcoin is continuing to go lower as well, or maybe not. Again, at the end of the day, an altcoin could be going down while Bitcoin goes up. You could go back in many altcoins and find that as a consistent trend in price for altcoins compared to Bitcoin over the years. But here from MATIC, it's broken through its these diagonal ascending supports so far. Again, like I said, just moving in its own unique way. Again, with fundamental respect to Bitcoin, we've come down and we did find this one support along the 800 EMA. Right now we're kind of testing this 200 EMA in general, just coinciding with this black box. So I mean, right now losing the 800 EMA won't be good. So I mean, it means losing $1 for MATIC won't be good, and then especially losing around 92 cents. MATIC pushing above about $1, pushing back towards $1.30 to down to $1.35 is likely going to insinuate either a double top is going to set in, or that is the early moments before it finally starts to break the $1.55 once more and continue to push higher towards the upside. But that was essentially all that I wanted to go over in this video. Hopefully you guys enjoyed. Hopefully I did a good job of explaining things, most specifically this chart right here. Outside of that, everything being said, I hope all of you have a blessed day.
Ooh, I'm regretting now.